Hello, and welcome to another week of Ion Mortgage, Midweek Motivation and Mortgage Information. I am your mortgage agent, Keisha Johnson. I'm licensed under Royal Dominion Mortgages, and my company is RTS Mortgage Financial. Hope that you're having an awesome week. I know it's a little bit of rain out there, but Friday should be warming up, so I hope that's something to look forward to. All right, so let's make the best of it, and let's prepare for Friday so that we can enjoy a little bit of what's left of of the summer. Or I know the summer is basically over, but I'm saying that summer weather before we move into the winter cold chill, and we've been feeling a little bit of that, but Friday's something to definitely look forward to. All right, so I just want to touch base on a few things that's happened in mortgage land. And I hope that this will be some good news in some in some instances. But of course, I know that there's some that's not the best. That we may not be happy with regard. One of those, of course, is the credit score being minimum of 680 for CMHC. That's one of the insurers. So in order for them to look at your file, your credit score has to be 680. All right. Or at least one person on the file has to have a credit score of 680. So, this is, of course, can be discouraging in the sense that, if your credit score is below 680, then you only have one insurer to go to. And definitely one of the major ones being, of course, Genworth. So this, of course, let's look at a situation where your credit score is below 680. However, the product that you're looking for, only CMHC offers it. Now, I'm saying this to say that having good credit is the difference between you being put into a box and having options. You want to have options. You want to have the options to Genworth or CMHC. I've had files where it's been sent to Genworth and they've turned it down, and then it's been flipped to CMHC and they've approved it. Right? And if your credit is not the best and you only have the option of Genworth and they decline it, you don't have the option of CMHC. So you really want to position yourself where your credit is concerned. It's so important. I do seminars on credit, with regards to how to build, how to maintain it, so you understand your credit a little bit more. Puts you in a better position, a better mindset with regards to making sure that you prepare yourself for home ownership. So if you're interested in that, please reach out to me, kj@rtsmortgagefinancial.com. We can certainly schedule, a session that takes about an hour so that we can go through the details and we can get you on that road, whether it be to recovery or just understanding how to maintain it, right? Understanding why your credit is not moving. So these are things that you want to know about. All right. Another thing, of course, with regards to the your credit, sorry. Another thing with regards to your credit is, you always want to make sure that you're, pulling your credit and staying on top of it, making sure that you know what's happening. You don't want to be in a situation where something is on your credit that is a complete surprise to you. All right. So do keep that in mind. Now, also, a good thing is that interest rates are low. That's amazing, right? Interest rates are very low, actually. It's definitely if you are looking to refinance and you're almost, completed your term, it's a great thing for you because you're going to refinance at an awesome rate. If you haven't completed your term yet, or you maybe in the last year you tied into a mortgage and you want to try to break it, because the interest rates are very appealing right now, you really got to do the math. You got to make sure that it makes sense, because if that penalty defeats the purpose with regards to how much it is, then it might not be the best choice to actually come out of that mortgage. So make sure that you definitely look into and see what the penalty might be, right, with regards to that. But other than that, with the interest rate being low, it's great. The monthly mortgage payments are going to be less. But I do want to caution you, though, the rates are low, but purchase prices are quite high. right? So I mean, quite a big difference from the days when purchase prices were around maybe 300 in certain areas, certain more popular areas, right? Of course, with the interest, if the interest rates were this low, definitely the mortgage monthly mortgage is going to be a whole lot less with the purchase price being low, right? But with the prices being a little bit higher, then your mortgage payments are going to be a little bit higher, a little bit better based on the fact that the rates are lower. But I'm saying this to say, really pay attention, make sure you do your numbers, make sure you understand all the monthly costs when it comes to home ownership, so you're not putting yourself in a position where you are struggling to keep up. You're just living to pay the mortgage. That's it. You can't enjoy life. You can't take a vacation now and then. You are stressed out. You have property tax, you have monthly mortgage payment, you have hydro, electricity, water, all these things. You got to make sure that you really work the numbers and make sure that it makes sense, and that you're able to actually handle what that monthly mortgage payment is going to be. All right, so do keep that in mind. Also, the stress test has gone down from when it was first introduced to us, of course, and it's at 4.79 right now. This is great. Of course, a lot of us wouldn't mind that it just keeps going down until it comes right out, right? But it is definitely going down. So, it's at 4.79. What does that mean right now is that basically, you can qualify for $4,000 more of a home, right? I know it's not a whole lot. It's not breaking the bank, but that 4,000 can be the make or break between you being able to afford that or qualify for that property and not. Right, so every little bit makes a difference. So definitely, that's something to be happy about, and hopefully it will keep going down. That would be great. Another thing to keep in mind is alternative lenders right now are definitely a great thing with regards to you being able to where the rates are concerned. Anyhow, I know that when we think of alternative lenders, a lot of people actually think that, their rates are ridiculously high and stuff like that. But what's interesting is that, because the rates are so low, alternative lenders right now, their rates are basically what your bank's rates were probably a year ago, right? Now, the thing, one of the things to understand with, alternative lenders is that, you have to put down at least 20%. Okay, so if you have 20% down payment, then you definitely have the option of the alternative lenders, and definitely you don't have to go through the insurance premium of Genworth or CMHC, and the qualifying qualifying products are not as, or qualifying is not as strict as the banks, right? So this might be an option for you. Keep in mind, I want to go back to rates very quickly. Now, when you're putting a minimum of 5% down, right, your rates are naturally going to be less than someone who's putting 20% down. Why? Because anything under 20% is insured. Banks like when it's insured because that means their money is sure, right, from the government. So, they like that. So therefore, they're a little bit more generous with the rates. It will be a little bit lower. So, when you have situations, where someone's saying, well, this person offered my friend's sister, this rate, but you're saying this, you got to know exactly what their situation is. Are they a first-time home buyer? Because definitely, if that is the case, their rate's going to be a lot lower. Are they putting only 5% down versus you may be putting 20% down? And because you're putting 20% down, it's no longer insured. And so therefore, your rates are going to be a little bit higher. Same thing with someone who's refinancing. 9 out of 10, you're refinancing. Of course, you may have at least 20% equity in the home. Refinancing rates are typically, of course, higher than a first-time home purchaser. All right, anything with under the 5%, under 20% equity in the home. All right, so definitely do keep that in mind. And if you have any questions, you can certainly reach out to me. With regards to the whole mortgage process, I do seminars as well with regards to breaking down, the monthly mortgage payments, breaking down, amortization, variable versus fixed rates, things that I think that you want to wrap your head around. So when you're taking part in the mortgage process, things make a little bit more sense. You feel a little bit more comfortable. You can make your decision a whole lot clearer because you understand, when you're hearing, about the variable rate, about the amortization and these type of stuff. So, definitely I do seminars. It's about an hour. If you're interested, reach out to me. kj@rtsmortgagefinancial.com. I'll be more than happy to set up an online Zoom meeting, and we can certainly dissect and go down, all the different type of products and stuff like that, so that you can better understand the whole mortgage home purchase process. All right, so that's pretty much about it. I think I've kind of covered a few things that's happening right now in mortgage land. Certainly, as you know, as things come, I don't do it every single Wednesday. Depending on when there's information, of course. There are times when it will be more consistent, definitely. But if you have any questions in between time, certainly do reach out to me. More than happy to answer them. Other than that, I am still holding on to the quote, the motivational piece of coming out of COVID ahead and not behind. I can't tell you how many stories I've heard of people who have created their own business in the COVID climate. I know that it's not the most positive thing, but there are some positive things that are still coming out of it. So sometimes we really got to look at the positive, and try to stay encouraged, try to stay motivated, and keep your eyes on the prize, and let's focus on coming out of COVID ahead and not behind. All right, thank you so much, and you enjoy the rest of your week. Bye-bye.